macro factors in play, in my view, that supports gold here as a fundamental investment. But technically, too, I think that the wind is at our backs here. We've been looking for quite a while for this breakout. It's been really frustrating to wait for. Hello, everybody. It's Thursday, March 7th, 2024. This is Mike Preston at New Harbor Financial. Today, I want to talk a little bit about gold and what's happening in the gold market. Some exciting things are happening, and we're finally getting the breakout that we thought might happen. So we'll talk about gold and see if there's any opportunities for discussion. So we've been talking for quite a while about gold itself and the fact that it's on a very long breakout. So here's the chart of gold. This happens to be an ETF GLD. This is basically just tracking the price of gold. Take a look at gold here on a weekly basis. We've got two weekly bars here last week and this week. This is a clear breakout. If I go to the monthly chart, you can see this basically goes back 20 years. Gold had a very long 10+ year consolidation. Then it went sideways for the last 4 years. There was a triple top up here that it just took out. Triple tops, folks, don't usually hold. They usually get broken. This one got broken to the upside. So there's a lot of macro factors in play, in my view, that supports gold here as a fundamental investment. But technically, too, I think that the wind is at our backs here. We've been looking for quite a while for this breakout. It's been really frustrating to wait for. But a measured move here, if we take the width of this consolidation over the last 4 years and then project it upwards in the same quantity, it brings us to about 2,500 would be a technical target for gold. So whether or not that'll actually happen, I don't know. I'm going to share a few more charts. So one thing I'd like to point out is that the US dollar has been very stable over the last few years. We did have a bit of a move up here in 22, 2 years ago. We went to a high of around 115. Since then, it's really been consolidating sideways. A lot of folks are thinking that the dollar should collapse. I don't think the dollar is going to collapse. In fact, I think the dollar will be stronger for a couple of years, particularly if and when we enter a financial crisis, a meltdown in the stock market and in values of assets. I think there'll be a flight to the US dollar. It's viewed as a secured asset. Brent Johnson talks a lot about this in the dollar milkshake theory. I think he's right. The dollar should stay stable, and it has been for the last couple of years. In fact, I wouldn't be surprised to see us take out this old high in the next year or two, particularly if we enter a meltdown in the stock market. So the dollar has been stable. That's a key point, because normally gold does well when the dollar goes down. The dollar has not been going down, and yet gold is broken out like I just showed you a minute ago. The Federal Reserve, no surprise, has gone through some pretty crazy things the last 20 years. Here's a chart of the federal funds target rate. So past the financial crisis, we essentially went to zero for 10 years. I don't agree with what happened. I think it was unfair. I think it was coercive in a lot of ways, and I think we're going to pay for it. But back in 2016 or so, Fed Chairman Powell started to raise interest rates and then pivoted, the famous Powell pivot here. In late 2018, we went right back to zero and stayed there for a while. Finally, about a year and a half ago, we started raising rates, or the Fed started raising rates, and we went from 0 to 5.25. It was really the fastest interest rate increase in history. The bond market, or particularly the long-term bond market, collapsed in 2022. So here we sit at 5.25. But the whole time, the dollar's been pretty stable. That's key, because gold normally does well when the dollar goes down. I don't see that happening. Back to the dollar chart, I don't see the dollar collapsing. If it did, it would only be more of a tailwind on gold. Secondly, gold does really well when interest rates come down. When real rates go down or even go negative, gold does very well. And so Powell has been very adamant about not dropping rates. The market has been begging for a Powell pivot, or basically just a regime of declining rates again. But the Fed Chairman Powell has been very adamant about not capitulating to what Wall Street wants. I don't think they're going to drop rates until we see some kind of stock market crash. If we do indeed see that, rates will start coming down, which will further be a tailwind for gold. So the dollar's been pretty stable. I actually think it's going to get stronger. I think that rates come down when we see a financial accident. I think that's going to help propel gold higher. Here again is gold. It's broken out. It's up again today. We're solidly over $2,100 an ounce. I've been saying here in these videos, if we get a close above 2100, particularly one that lasts there for more than a day, this would support the notion that gold's going to continue to break out. So this is the third day above 2100. Hopefully gold stays here and builds on this rally. So for people that don't own any gold, we still think it makes sense to have 5 to 10% of your investable assets in gold in bullion form, preferably somewhere where you can get your hands on. We'd be happy to speak with you about our recommendation. Normally we recommend gold coins, either American Eagles or Canadian Maple Leafs, but there's many other options as well. And if you can store them in a place that you can access them, that would be ideal. And that would normally be in a safe or a safe deposit box. If you're not comfortable with that, talk to us about other options. This should bode well for gold mining stocks. Let me show you a chart of GDX, which is an ETF that tracks gold mining stocks. This has been relatively frustrating. So there's been a lot of folks puzzled as to why gold stocks are underperforming. You look at this and compare it to the chart we just saw, why isn't GDX back at new highs or at least close to that? When gold is at new highs, why isn't this at new highs? Well, it's pretty frustrating. There's a few reasons, I think. Number one, inflation has eaten into the cost of getting gold out of the ground. Gold now costs about $1,200 an ounce to get out of the ground. And 5 to 10 years ago, it was more like $600, $700, or $800 an ounce. So the gold cost of extraction has gone up with inflation, and so therefore, that has eaten into the profitability of gold mining companies. However, they're still insanely profitable here with $1,200 an ounce cost of getting gold out of the ground, and gold at 2,100, it's $900 per ounce profit. But Wall Street still doesn't believe them. The CEOs and the management of gold companies have been somewhat irresponsible. They've done some bad acquisitions. They've overinvested. They just haven't been great stewards of capital. That's perhaps why the gold stocks are lagging as well. And then there is the ever-present risks of political intervention. A lot of these companies operate in countries that have questionable political interference, and that's always some kind of concern. There's one big gold company that had a mine shut down in Panama due to such concerns about the environmental impacts and such. So that's always there. I don't see that as being different. And the other thing that I guess I'd say, though, is that there's been a lot of balance sheet repair over the last bunch of years. A lot of these bad decisions have been written off. A lot of these balance sheets have been restructured. And with $900 profit right now, I think that these companies are vastly undervalued. The price to earnings ratios are in the high single digits for many of these companies. They're producing a lot of cash flow. And if you think about it, if gold goes up to $2,300 or $2,500 an ounce and the cost of extraction stays the same, well, let's just run through an example here. At $2,100 per ounce gold, if it costs $1,200 to get out of the ground, that's about a $900 profit. If we go up to $2,500, that $900 becomes $1,400, and that's 1,400 divided by 900 is a nice almost 50% increase in profitability, all things held equal. And if you understand how corporations are valued, they're valued on a multiple. And I just said that the multiples right now are roughly in the high single digits. But if you increase the profitability by 50%, there's a multiplicative effect. And without a spreadsheet, it's difficult to describe, but you might see gold go up $400 an ounce, and you might see profitability go up 50 to 70%. And if you then get the attention of Wall Street starts paying attention, we could then see multiple expansion happen. You'd go from a price earnings ratio of 8 to maybe 16 or 18. So we could easily see prices of these gold stocks go up 50 to 100% from here. Nobody's really paying attention right now. I think that's about to change. And the sentiment has been so bad in this sector. It's almost been so bad that it's good. So what I've seen is a capitulation. And we'll see. We'll see if I'm right. But I think the gold breakout chart that I showed you, the breakout out of a 15-year consolidation, really, and the last 4 years, triple top being broken to the upside, I think is pretty poignant. So that's what we're seeing this week. We continue to hold gold stocks at roughly a 10% allocation. If you don't have any gold, think about getting some. If you'd like to have a review or want to talk to us about any of this, please send us an email or give us a call. If you look in the description below, for those of you that aren't clients, if you'd like to connect and chat about this, there's a link there that you can click and connect with us directly. We're happy to have a no-cost chat with you about this or anything. So until next time, this is Mike Preston at New Harbor Financial. Thank you. Bye.